Welcome to In the Hot Seat with the Tenney Group. I'm Spencer Tenney. It is good to be with you. Today I've got Scott Barron from BNY Mellon, Senior Client Strategist. Scott, welcome to Hot Seat.
Hey Spencer, thanks for the opportunity.
All right, we're going to heat things up here in a minute. So why don't we just take 20, maybe 30 seconds. Tell us a little bit about your group there and what you're doing for your clients currently.
Absolutely. So I lead a team of professionals that helps business owners pre and post sale, whether it be with estate planning, income tax planning, post sale planning for investment proceeds, really setting them up with their own virtual family office post sale. And that's what we do all across the country.
All right, Tenney Group network folks, listen up. For those of you that are thinking about selling a business in the next 1 to 3 years, I think you're going to have some nuggets. So let's dive in here. So let's just say the top 3 things people should be doing, trucking logistics companies from a pre-sale planning standpoint. What should they be doing?
First and foremost is hiring their team of advisors. Really that kicks off with you, not to make a personal plug, but I think you're critical to that piece. But also ensuring they have someone set up their personal planning from an estate and tax planning standpoint. So having a great attorney to help with that, and really assembling your deal team from a CPA to evaluation expert, and making sure all those professionals are coordinating together, because you want to have a coordinated team approach when you go to sell, because that's going to make your job and their life much simpler once the deal process actually starts.
That's a good word there. So I know you reside in Orlando. You advise all over the country, but here just recently you were in my backyard in Nashville at a wealth management conference, speaking on a panel about trends and such. So tell us about what are the trends that we're seeing, particularly for high net worth individuals who many of our clients who exit become. What are the trends around wealth planning right now that came out of that conference that you can share with us?
I think one is estate planning. That the estate plan is due to sunset in 2026. So, what can we be doing from a gifting standpoint now, whether it be pre-sale, post-sale, to ensure we're maximizing that? Also, what to do about capital gains? Do I do an opportunity zone fund now? Do I do a 1031 exchange? What are some strategies around that we can utilize? Because again, we're in the historically lowest tax rates in the history of our country. So is it best to pay a tax now? And there are some strategies we can do about that. And really also, where do I put money? We've had record markets. The last couple of years have been in a 10-year bull market, even when you throw in COVID. So where are the opportunities at now? And that's when we're really talking about some alternative asset classes for clients, really some diversifiers to hedge against what's going on in the fixed income and equity markets right now. We're in a rising interest rate environment, a inflationary period, and then we have a global political conflict as well that we're dealing with. So how are we actively managing that? And I think it really goes back. You've seen the trend in our business for the longest time to go passive. You just need a passive ETF, and that's going to set you up fine. But in volatile times, that is when active management really shows the benefit of it in times like these.
Oh, I think that's a good word. So let me just pause there for a second. I'm going to move on. You mentioned sunset with some estate planning. So can you just provide a little bit more detail for our audience in terms of what you meant by that, as far as what that means?
Yeah, absolutely. So as of right now, you can gift, I believe it's $11.7 million per couple, so almost over $23 million to kids or grandkids. And that can be passed to them tax-free and getting out of what's called your estate. And so what we try to do is if we don't maximize that during your lifetime, you then either lose the ability to do it because they lower the limit, or you're going to be taxed on that upon your passing. So we try to make sure that we get as much money passed down to the next generation and 2 generations after that as possible, at the lowest cost. Because again, our job is to keep more money in your pocket and less in Uncle Sam's pocket. And so what we try to do that is being proactive in that strategy.
And as the great wealth manager Shaquille O'Neal once said, it's not what you earn, it's what you keep. It's what you keep. So thanks for elaborating on that a little bit more. So let's talk about on the other side of the transaction. What are some of the things, um, we have maybe a lifestyle that's a little bit different in terms of what they Maybe they don't want it to be, but these are the things that you need to consider. I mean, you've been owning a business, you've had a certain lifestyle. What's the business? I mean, what's your lifestyle going to be after the fact? So, what are these conversations? Walk us through a conversation with a person that either is about to sell or they just sold their business. What is the conversation as far as trying to manage a lump sum of money while considering trying to maintain a similar lifestyle?
Absolutely, and it's the conversation we call, from entrepreneur to investor, and that is really post sell. What do I do? I'm really concerned about my lifestyle. Am I going to have the friendships I had before because I'm not going to the office every day? What am I going to do every day? Oftentimes when business owners transact, we become their employees essentially because we're handling the day-to-day aspect of their financial situation now. They're not used to seeing their business or their portfolio mark to market on a daily basis, so we're doing a lot of coaching around that. But I think also, look, what we tell our business owners, whether it be pre-sale or post-sale, this isn't the end. You're an entrepreneur in spirit. If there's other opportunities, of areas of opportunity you want to do, why don't we look at setting yourself up with a family bank and funding new ventures, whether it be for yourself or for your kids, your grandkids. Really continuing to find ways to pass the values that you had as an entrepreneur down to generations, so that the wealth will continue to grow in your family. In our business, you hear the term shirt sleeves to shirt sleeves all the time, where the first generation is the one that makes the money, the second generation kind of maintains the money, and the third generation is the one that loses the money. And so our job is to help provide strategies, not on just estate planning, tax planning, but other ways to fund the family long term. One of our best clients had a family that sold, their family sold their business 10 years ago. He went in and rebought the business 5 years later and is continuing to grow it and that's going to be an opportunity for his kids to then get in the business and run it and potentially transact again. So again, we're trying to find ways to help people continue to live the life they want, but we also think it gives you a lot more flexibility when you are liquid, to be able to do that.
So, you mentioned the family bank. That's not something that I would suggest that most of our audience is familiar with. So, tell us about a time where you had this liquidity event from the sale of a business, and now a business owner who's entrepreneurial, who has de-risked most of their financial wealth, but now has become a banker. Like, tell us about a time where that actually happened. What did he experience, and what fulfillment did he get out of that new experience?
Yeah, absolutely. So we always tell people, how would you like to be the freedom to be your own lender? You never have to go through a banker's box and get a loan ever again. You can be the one to loan yourself. Well, we're actually the ones that are lending you the money, BNY Mellon, but we're doing it at super low cost because essentially we're lending to high net worth families. We have the highest credit rating of any bank in the country. And we do not have a retail presence. So we do not have overhead near as much as our competitors, and we have a high credit rating, and we're lending to people that technically may not need the loan. So we're able to pass off low cost lines of credit utilizing our clients' portfolio as collateral, which we call an investment credit line, to then go fund other business enterprises. So we're keeping the corpus invested in the markets, earning a conservative rate of return, because again, our job is to keep you wealthy. But with interest rates still being low, even though rates have been going up, they are still at historical lows, and they are still opportune times to utilize loans to fund other business interests, to finance your capital gains taxes from the sale of your company. Um, all of that allows you to continue to grow the family enterprise, the family corpus, which is the portfolio, and continue to fund other business enterprises. There's a lot of opportunities for tax savings in that. There's also, I think we always try to tell our clients there's an importance to having a barbell approach to your lifestyle. So, a lot of our clients, once they sell a company, want to start investing in real estate, because they view that as a safe asset, especially in their local markets. So we say, okay, that's great. And real estate we view as a tremendous asset class, whether it be in private markets where we're investing in or in your local markets. Instead of taking that cash out of a sale, why not utilize a low cost line of credit that could be fixed for a certain amount of time to then purchase that real estate asset, allowing money to continue to be invested, allowing your money to continue to grow conservatively, and continue to expand your balance sheet. So we see a tremendous amount of our clients utilize that, utilize that strategy to continue to help them to look. Many of our clients have never been liquid before. Many of them have never been invested in the stock market before. Um, so, I would say their main experience in the markets has been their 401k plan, potentially through their company. So, our job is to help them get comfortable with that, understand the value that you can have in that, but also allow them to invest in what I call tangible assets that they want to be able to touch and feel and go buy and see in their truck every day. And that's what we try to help them do, is that.
So we've also talked about the bank being used to address the taxes from the actual sale of the business. So this might be a little bit foreign to some people as well. So how does that work as far as using your own line of credit, and why would somebody do that?
Yeah, so again, in a low interest rate environment, which we still are in, even though rates are rising, um, many of our clients, specifically the last 2 years, have said, okay, I've just sold a business for $10 million. I have about a $2.5 million capital gain tax. What's the plan here? Do I do a 1031? Do I do an opportunity zone fund? Um, we again, there's reasons to do any of those, but one other area, which again we're trying to provide clients advice and give them multiple options. Another area that we have been taking advantage of is low interest rates, utilizing that portfolio as collateral, and where we'll structure a fixed rate for that $2.5 million capital gains tax. We can fix it for 5, 7, or 10 years. Build out an amortization schedule for it, and show you the value of, say, instead of having only $7.5 million invested in the market, we keep the full 10 invested, and over a 10-year period, what the conservative assumption rate of return is on that portfolio, the arbitrage or the net difference between the cost of the loan and the growth in the portfolio. And as you can imagine, the bigger the number, the bigger the value there is. But in this interest rate environment, there's still opportunities to take advantage of that.
Yeah, and I think this is really important just from an education standpoint for transportation logistics owners to understand, because they are talking about some big numbers. And from the opportunity cost of potentially paying when prematurely, that could be expensive. So just the knowledge of some instruments that may allow you to hold on to that money a little bit longer, that could be pretty meaningful. So I'm glad that you have brought that to our attention here. Let me ask you this. Um, for family-owned businesses, what's the best advice for when you have, let's just say, generation one, you got generation two. Generation two is not quite ready, but there's all kinds of opportunities in the market. Yet all of the wealth is tied up in to the trucking business. What advice would you give someone that has concerns about that has conflicting um, motivations? They want to keep the money, they want to keep the business in the family, but they also have high concerns about concentrated risk in the business moving forward as well. What can you tell those folks?
I think a lot of people always view there's a zero sum game. You have to go all in one way or the other. There's always opportunities to recapitalize, to find a strategic partner, and I'm sure Spencer, you help a lot of folks in just that area to take some chips off the table, but also they want to still maintain control. We see that more times than not because a lot of our owners really they want to still stay in the business. They're still very young, but they also realize some of the dollars that are being thrown at them right now, they should take advantage of that and take some chips off the table. So I think a lot of it is finding the right strategic partner, finding the right advisors to help coach you on the multiple different options you have there in that. Because again, I don't think it has to be you sell 100% of your company. I think there's a multiple of different various options that we could spend an hour on this talking about.
Well, I think that's sound advice there. So, one last question. It's a wild card. Um, let's just say if you're talking to young Scott, um, is in college, and you're going to try to give some advice to young Scott about getting into the world of finance or whatever it is, serving people, working with business owners, what's the advice that you would give to that 22-year-old Scott who's just trying to find his way?
I think I think approaching your career as, especially in our business, as a steward of people's wealth. We're blessed to be in a area of advice. Um, and helping people become comfortable with that advice. I think when your values as a person align with your business values, and you look at your client as you being able to serve them, being a steward for them, that is, I think, what makes my job every day a joy to come to. And I think when you're younger, when you're 22 and you're just getting out of college, all you're worried about is trying to get a promotion and trying to put trying to have more money in your checking account. But now that I've been doing this for almost 9 years now, I think the beauty of it is coming to work every day knowing that we really help people solve problems. Our job is advice. We're not selling you anything. Our job is to put your needs before our own and help you enjoy the life you want and make life simple. And that's what we try to do on a daily basis. Is that.
Sage advice, sir. I really appreciate it. Thank you for joining us on the hot seat. We will see you out on that wealth management speaking tour soon. I'm expecting. But until then, sir, we appreciate you, and we'll see you next time.